Welcome back. So in the first part of Audit 3, we've looked at management responsible for internal controls. And I gave you a mnemonic crime to remember the 5 components of internal control. Remember, the C of the crime was the control environment. R was risk assessment by management. Information and communication. M was monitoring by management. E was the very important existing control activities, the ARCs, where A was authorization, R was recording, C was custody, the second C comparison, and the S, that was segregation of these duties. Now we will look at the auditor's consideration of internal control. This is the time that we step in. Now for this I'll give you another mnemonic, and this is a mnemonic you're going to remember now. You're going to remember for your CPA exams, and trust me, you'll remember it for the rest of your life, because this mnemonic tests your basic identity. It asks you whether are you CPAs? So crime was your mnemonic to remember management responsible for internal controls. Are you CPAs is a mnemonic for you to remember the auditor's assessment of internal control. Let's look at that. So you have the audit procedures by the auditor, which we summarize using the mnemonic are you CPAs. So you have the audit procedures. So guys, when you guys become auditors, you go to the field, you go to the client's site to gather sufficient appropriate audit evidence. You remember your mnemonic are you CPAs. Now, the R of RUCPAs stands for risk assessment procedures. So, R is risk assessment procedures. Now, wait a minute. We had risk assessment even in our crime. Let's look at it again on our dashboard. So, you have the R of our crime, which is risk assessment. Guys, remember, this risk assessment is risk assessment by management, because management is responsible for internal controls. This is the management's duty to analyze and think what could go wrong. They need to analyze, identify and manage risks. Management's job, management responsible for internal control. Now, R of RUCPS is risk assessment procedures by we, the auditors. Now we step in. We try to think what could go wrong at the company. So R of RUCPS, risk assessment procedures by we, the auditors. R of crime, risk assessment by the management. R of crime, management thinks what could go wrong. R of RUCPS, we come into the picture, we perform our procedures to analyze what can go wrong at the company. So in the risk assessment procedures, I want you to again recap on the audit risk model I gave to you in Audit 2. Remember, audit risk is equal to inherent risk into control risk into detection risk. So audit risk, that was a risk that kept us tossing and turning in bed. Remember, that was a risk that we gave a clean and unqualified opinion on materially misstated financials. So these financials, they're cooked up, but we give a clean opinion. That's our audit risk. So we want to avoid that. Okay, now audit risk has got 3 components. Inherent risk. This is the risk that the client's accounting system misses the material misstatement. This is basically susceptibility of an item to risk. Risk inherent. Control risk, risk that the client's internal controls. So the client has got certain internal controls that creates these financials. So it's control risk is the risk that those internal controls by the client misses a material misstatement which appears on these financials. Now we know that inherent risk into control risk is also called the risk of material misstatement, or RMM. So as an auditor, as part of our risk assessment procedures, we only assess the risk of material misstatement. So risk of material misstatement is there at the client. At that point, we come in and we determine our detection risk. So detection risk is the risk that we, the auditors, we miss a material misstatement which then appears on the financials. This could be very risky. So guys, if the risk of material misstatement is high, let's say the client does not have proper internal controls, What do? We are more careful. If this is high, we minimize our detection risk. How do we do that? By doing more work as auditors. So RMM, we as auditors, we only assess what the RMM is at the client. Detection risk, we determine by performing or increasing or decreasing our audit work. So if we increase our audit work, if we do more work, detection risk reduces. Naturally, right? If we do more audit work, the risk that we would miss a material misstatement is low. But if we do less work, the detection risk or the risk that we as auditors, we miss a material misstatement, that increases. So this is risk assessment procedures. Now, risk assessment procedures, we do it in two phases. The first phase is U. Now, U stands for understanding the entity and its environment, including its internal control. So I would say it's understanding the entity plus its internal control. So when we're looking at the entity, we are trying to understand what are the business risks of the entity, the way the client functions. When we're looking at internal controls, guys, we are looking at the crime. We want to check whether the management has the crime, the 5 components of internal control in place. And very important, we are looking at E of the crime. We are looking at whether they have the arcs, where authorization, recording, custody, comparison and segregation of those duties, the arcs that the management needs to have in place. Now, in this phase, we are looking at the design and implementation of internal controls. So we are looking at whether the crime has been designed properly, have they designed proper internal controls, and whether they have implemented those controls. We are not yet looking at whether those controls are operating effectively. We are only looking at design and implementation. And as auditors, remember, you document whatever you find. I'll elaborate on find on the other part, but for now, remember, we document whatever we find. Now, after R and U, we come to C. Now, this is the second step of our risk assessment procedures. So, as part of our risk assessment procedures, to develop this audit risk model, to develop the RMM, we first look at the entity. We come in, we look at how the internal controls look. What's the form of those internal controls? Have they been designed? Have they been implemented? And now, based on that understanding, we do a control risk assessment. So, by looking at internal controls, so we look at we step into the company, we look at the internal controls. By seeing the design and implementation, we assess the control risk. Guys, remember, it's very important for us to assess the control risk because that determines our detection risk and completes our audit risk model. So, after doing the control risk assessment, we then perform test of controls. So here we were looking at design and implementation of controls. Here we are looking at the operating effectiveness. So here we are looking at whether internal controls have been designed, whether they have been implemented properly. Here we are looking at, are they operating effectively? Are they operating properly? Are they operating as they were intended to operate? So this is the test of controls where we test internal controls. After we perform the test of controls, we want to again assess what the results are. Now, depending on what we find here, we decide how much of substantive testing we want to do. That's the S of our RUCPAs. Now, we certainly remember that. So, let us say internal controls were good. So if internal controls work good, we say that internal controls are good, we can rely on those controls. Okay, before I get to substantive testing, let me quickly give you a difference between the test of controls and substantive testing. So when we are looking at test of controls, we are looking at percentage frequency wherein the controls are adhered to. So if you remember, I had given you a quick example on the revenue cycle. When the sales team, they created the sales, so when they got a purchase order from the client, they created an internal sales order. Sales team creates it. which then goes to the credit team. The credit team authorizes the credit for the customer. It authorizes that yes, the customer's credit is good, we can sell the goods on credit. So that is basically looking at test of controls, whether that control of the credit department authorization, whether that has been adhered to. So maybe what we would do as auditors, we would pick up a bunch of, let's say, 20 internal sales orders. So we are looking at 1 to 20 internal sales orders. So we have the first, second, third, fourth, fifth, sixth, seventh, all are authorized. All the sales orders that we are looking at have been authorized by the credit team. But then when we get to the 8th sales order, we see it's not been authorized. Again, we look at 9th to 20th orders, they have been authorized. So we find that sales order number 8 of the 20 that we are seeing has not been authorized. So we could say that the controls have been adhered to 19 out of 20 times, or 95% of the times. 5% of the times the controls are not adhered to. So here we are looking at percentage or frequency of occurrence. Now, when we look at substantive testing, at that point, so when you're looking at test of controls, we are testing the internal controls that create these financials. When we are looking at substantive testing, we are looking at the dollar numbers that you have on these financials. We are looking at all the dollar transactions, so all the dollar sales, the dollar purchases, the dollar expenses that we had during the year. We are looking at the dollar balances. So we are looking at the balances of your assets, your liabilities, your equity on your balance sheet. We are looking at disclosures. So you have a lot of disclosures. So substantive testing generally means test of details or test of dollars that you have here. So test of controls, we looked at whether those internal sales orders were authorized by the credit team. When we are looking at substantive testing, we might want to look at the allowance for doubtful debts, the allowance for uncollectibles that we have, the dollar number for allowance. So let's say when we did test of controls, we said that the controls are adhered to 19 out of 20 times, or 95% of the times. When we are doing substantive testing, we might want to say that the allowance for uncollectibles is understated by $20,000. So here it's percentage or frequency, it's dollars here. We are concerned with numbers on the financials when we are doing substantive testing. So guys, if internal controls are good, if the controls creating these financials, that's very good. What happens? We say that the control risk, that's low. So if internal controls are good, the control risk is low, which means that we can afford a higher detection risk. Think about it. To stay at the same audit risk level, if control risk is low, we can have a higher detection risk, which means we have a good time out there. We do less substantive testing. Now, think about the other case. How about when internal controls are bad? They are pathetic internal controls. So if internal controls are bad, what happens? The control risk is high. So as auditors, if the control risk is high, the risk of material misstatement on these financials is high. If we assess that's pretty high, we know we need to keep the detection risk low. And that means we have to do a lot of audit work. We want to test all the dollar numbers that they have here. We lower our level of materiality and end up doing a lot of audit work, lot of substantive testing. So guys, if the internal controls are good, control risk is low, we can afford a higher detection risk, we have a good time, do less substantive test. If internal controls are bad, we say high control risk, we need to lower the level of detection risk, we need to lower the risk that we as auditors, we miss a material misstatement. How do we do that? By doing more work as auditors. So we have higher level of substantive tests. So now, we did RUCPAs, where RUC, this was the risk assessment procedures, first audit procedure, risk assessment. Then we did test of controls and substantive testing. So risk assessment procedures, first audit procedures. Then we do further audit procedures. This helps us decide how much of further audit procedures, the nature, the extent, the timing of these further audit procedures. Further audit procedures include the test of controls and substantive tests. So now when we are at this level, when we are doing the control risk assessment, the question that we want to ask as auditors is control risk below maximum? That means when we looked at the form of internal controls, when we looked at the design and implementation of internal controls, did we think that we can rely on this internal controls? Control risk are not at maximum, it's below maximum. So if yes, if we think we could rely on it, I mean, we're only looking at the form now. So if we, by looking at the form, we think yes, we can rely, then we want to perform the test of controls. So we perform those tests. So we step into the company and we understand the internal controls. After understanding the internal controls, we do an assessment. Do they have internal controls? Can we rely on those controls that they have? Or at least, do we think we can rely? If yes, we say control risk is below maximum and we test those controls. After testing those controls, we assess the results. Now, when we assess the results, maybe we could find good internal controls where we do less substantive testing, because if internal controls are good, the probability of numbers, the wrong numbers coming on this financials is low. Think about it. If internal controls are excellent, the probability that the client will have misstated financials is very low. So we do less work. But if internal controls, we test the controls and we find them to be pathetic, we know that there could be a lot of misstatements on these financials and we do more audit work to find those misstatements. Now, let's rethink. Let's come back to this stage. So we have RUCPAs, Serious Control Risk Assessment, the last leg of our risk assessment procedures. Now, let's say at this stage, we found that the form of internal controls is pathetic. Let's say we went to the company, we tried to understand the internal controls and we saw that they don't have segregation of ARC. So we saw that there is just one guy in the company who does authorization, who does recording, who has custody, who does comparison, and he goes back home in his lovely convertible Ferrari. Do you think that there are any internal controls there? I don't think so. So why do I waste my time in testing controls which do not exist? So if we come into the company, we understand internal controls and we say that control risk is at maximum, that means they do not have any internal controls. In that case, I would skip test of controls and I would directly move to substantive testing. Think about it, guys. So I was at this phase and I said, because control risk is at maximum, I will not perform test of controls. And if I don't perform test of controls, I don't need to assess any results. I would directly move from C to S. From C, control risk assessment, to S, substantive testing. So I would say here that internal controls, they are pathetic. In that case, control risk, as we know, that's at maximum level. Naturally, I need to keep a very low level of detection risk. How do we do that? By doing more substantive testing, lot of substantive testing, testing every dollar that they have on their financials. So it's something like, in this case, what we did was what we call a combined approach. So this is a combined approach where we did both test of controls and substantive testing. We did both of them. This one is a substantive approach. And here we did substantive tests only. We did not do any test of controls because controls don't exist. So in this case, we moved step by step. Here, when control risk was at maximum, we told the company that, look, you don't have any internal controls. We do not want to waste our time testing no internal controls that you have. So you tell them, I'm going back now. I don't want to test your internal controls, but I'll be back. So all you Terminator fans out here, you know what I'm talking about. You say, I'll be back. You say, I'll be back at year end. I'd look at every dollar number that you have on the financials here. I would need sufficient, appropriate audit evidence to corroborate all these numbers that you have on the financials, because I did not test your internal controls. You didn't have any internal controls. We said control risk is at maximum. We saw that you did not design any internal controls. You did not implement any internal controls. We would not perform test of controls, directly do substantive testing via the substantive approach, where we simply do substantive testing. Now, if there were some internal controls, if they had designed and implemented at least some internal controls, we saw the form was okay, only in that case we would have performed test of controls. Now, this and this, they look similar, right? This is different. Internal controls are good. Internal controls are bad here. Internal controls are bad here. Now, this is something that when we actually performed the test of controls, we found that the internal controls were not so good. Here, only by looking at the form of internal controls, the design and implementation of internal controls, we found that the internal controls are not so good. Now, this approach where we skip performing test of controls is possible only for non-issuers. We can do so only for non-issuers. Because for issuers, if you remember, it's an integrated audit. It's an audit of internal controls over financial reporting integrated with an audit of financial statements. So we do two audits there. Audit number 1, financial statements. Audit number 2, internal controls over financial reporting. So we give two opinions. So let us say we are auditing an issuer and we find that control risk is at maximum at this level. Even then we would perform test of controls, and if we see control risk is still at maximum, that means they have pathetic internal controls, we might give an adverse opinion on internal controls and whatever opinion on the financials. It could be adverse, it could be qualified, it could even be unqualified. It's not necessary that, if the internal controls are bad, these numbers are wrong. Maybe the client might have bad internal controls but the right numbers here. So we would give two opinions depending on how the internal controls are and how the financials look. But that's for issuers. Two opinions, integrated audit only for issuers. Non-issuers, we simply do an audit of the financial statements. We are not doing an audit of internal controls. Now, so one more thing that I want you to note here is, here we are looking at design and implementation. Here we are looking at operating effectiveness. Or in other words, let's try to understand this even further. So at this stage, RUCPAs, at the U stage, we are looking at the form of internal controls, as I'm telling you, the design and implementation. Control risk assessment, we ask, is the form okay? So we ask here, we look at the form here and then we ask, is the form okay? Then we look at substance, where we perform the test of controls. And then we ask, is the substance okay? Now guys, this is somehow the way we find your life partners in life, right? So you are there in college, you look at a girl, you look at her form, you ask yourself, is the form okay? I mean, is she beautiful? Is she gorgeous? If yes, then we want to look at substance. Does she have the right brains for an accountant like me? Does she have the right attitude? Is the substance okay? So if the form was okay, we looked at substance, brains, attitude. If the substance was okay, we married her and we spent our rest of our lives with a new girlfriend or with the wife then. So first we looked at form, the figure, the beauty. Then we looked at substance. How about when we looked at form, we found that the form was not okay. I mean, she was not so beautiful, she was not so gorgeous, she was not the best girl I want to hang around with. Then we might not even look at substance. Unless we became friends first, when we looked at substance and we didn't care about the form. So let's say you became friends with a girl who's not so beautiful, but you really like the way she thinks, you really like her attitude, then you don't care about the form. But generally, as a general rule, we start with the form. Only if the form is okay, we look at substance. If the form is not okay, we might not even look at the substance. Same thing as CPA auditors. So if the form is okay, then you look at substance. If the form is not okay, you don't want to waste your time looking at the substance. So guys, you're getting it? This is somehow how you operate in real life, how you find your girlfriend, your wife, your life partner. Good way for you to remember RUCPAs. Now, let's look at it from another perspective. So, I've given you the real life perspective. Now, let me give you a definitional perspective. So, I'm now looking at the second standard of fieldwork. And it says, the auditor must obtain a sufficient understanding of the entity and the environment, including its internal control. So, the auditor must understand. So, let's say the auditor must understand internal controls. And why should he do so? To assess the risk of material misstatement of the financials, whether due to error or fraud. So the auditor is looking at, he must obtain a sufficient understanding of the entity and its environment, including its internal control, to assess the risk of material misstatement. So he's understanding the internal controls to assess RMM, whether due to error or fraud, and to design the nature, timing and extent of further audit procedures. To design, I would say, the nature, the extent, the timing of further audit procedures. So as I told you, okay, so we have looked at two levels of analysis. First, how you find your wife. Second, the second standard of fieldwork, the I of a field pick, which says the auditor must obtain a sufficient understanding of the entity and its environment, including its internal control, to assess the risk of material misstatement, whether due to error or fraud, and to design the nature, the timing, the extent, or we could say the net of further audit procedures. So as I told you, are you CPAs? This is all your audit procedures. This is all the job you do as auditors to gather sufficient, appropriate audit evidence and to earn all those big bucks. So we'll divide it into two parts. The first part we would say is risk assessment procedures. So as I told you, RUC, this is our risk assessment procedures. This is part 1. Second part, so we do risk assessment procedures here. The second part is further audit procedures, where we do test of controls and substantive testing. Now, when we do our risk assessment procedures, we look at the form of internal controls. We understand the internal controls and we ask as auditors, is the form okay? Only if the form is okay, that means the control risk is not at maximum. The control risk is below maximum. So if control risk is below maximum, we then perform test of controls. We then look at the operating effectiveness of internal controls. And after looking at that, we then assess results and do substantive testing via a combined approach where we are doing both test of controls and substantive testing. However, if at this stage we found that the form is not okay, that means she is not beautiful at all, I don't want to look at her substance, so I skip test of controls and I directly do substantive testing. Now, test of controls you may skip, depending on the form, you may skip test of controls, but substantive testing is mandatory, it's required in audit. So guys, you are giving an opinion on these financials. It's okay if you don't look at the internal controls, you don't do test of controls, but it's not okay if you don't look at these dollar numbers, because you are signing off on these dollars. So you have to do some level of substantive testing. If internal controls are good, they're excellent, then you do less substantive testing. That's okay as per your judgment, because you think the controls would create the right financial statements. You don't need to be so worried about the materially misstated numbers out here. But if internal controls are bad, then you do lot of substantive testing, lot of hard work. You look at all the dollars, all the transactions, balances and disclosures on these financials to make sure that you have a lower level of detection risk and you find any material misstatements out here. Let's get into the book and again look at RUCPAs. So we have RUCPAs. On page 8, we're looking at the auditor's consideration of internal controls. the auditor must highlight obtain a sufficient understanding of the entity and its environment, including internal controls. Highlight to assess RMM or the risk of material misstatement. And highlight to design the nature, extent and timing, the net of further audit procedures. Our mnemonic to understand the auditor's consideration of internal controls is RUCPAs. So the first line, draw an arrow and write RU. The second line, draw an arrow and write C. And the third line is write PAS, draw an arrow. So guys, the R of RUCPAs is risk assessment procedures. The U is understanding the entity and its environment, including its internal controls. C is control risk assessment. So control risk is what determines RMM or the risk of material misstatement. PAS, P is perform test of controls. S is substantive tests. These are the further audit procedures. So make a note there, right? Further audit procedures, that's test of controls plus substantive tests. Now let's look at the auditor's consideration of internal controls while doing an audit for non-issuers versus issuers. So put a box around non-issuers, where highlight the auditor expresses an opinion on the client's financial statements, not on internal controls. However, the auditor is required to perform risk assessment procedures. So that's the R of our RUCPAs. Now, as part of further audit procedures, it is optional to perform test of controls, though it is required to perform substantive tests. So guys, in audits of non-issuers, test of controls, that becomes optional because the auditor is giving an assurance on the financials, no assurance on internal controls. To the contrary, when we're looking at audits of, put a box around issuers, it's required for the auditor to do an integrated audit, where auditor provides opinion on clients' financials as well as effectiveness of clients' internal controls over financial reporting. And therefore, the auditor is required to perform test of controls. To support the auditor's opinion on ICFR, and which also helps the auditor support his CR or RMM assessment for the purposes of the audit of financials. As far as internal controls over financial reporting is concerned, management is responsible for the internal controls. The auditor is responsible for his opinion on the effectiveness of ICFR. Let's get to page 9. Now, when the auditor performs risk assessment procedures and does the control risk or the RMM assessment, the auditor responds to RMM at the overall financial statement level and also at the specific assertion level. So on page 9, we're going to look at the auditor's assessment and response to, put a box around RMM at the financial statement level. So basically, we're talking about risks that relate pervasively to the financial statements as a whole and potentially affect many assertions. So write R for risk assessment procedures. Write U for understanding the entity and its environment, including internal controls. Right? C for control risk or RMM assessment. And then we've got develop, highlight overall responses to financial statement level risks and draw an arrow downwards. Now guys, for you to understand these overall responses better, I'm going to give you another mnemonic. And this mnemonic is fill in the bubbles there. T, U, N, A. So the auditor needs to eat tuna fish to energize. Before we come to the question on RUCPAs, where the auditor looks at RMM at the assertion level. So guys, once again, when we talk about response to RMM at the financial statement level, our mnemonic is going to be tuna. On the next page, where we look at the auditor's response to RMM at the assertion level, our mnemonic is going to be RUCPAs. So let's look at tuna on this page. The T highlight team on the audit engagement. So basically, if the auditor finds risk at the overall financial statement level, the auditor would emphasize to the audit engagement team the need to maintain professional skepticism. The auditor may assign more experienced staff or those with specialized skills, even use specialists. He may want to provide more supervision. Again, to respond to risk at the financial statement level, the auditor may want to highlight unpredictability in the selection of further audit procedures. The N of tuna, that's highlight net of audit procedures. Now the assessed RMM at the overall financial statement level significantly affects the auditor's general approach. So for example, the question is whether the auditor adopt a substantive approach that's focused on substantive testing or a combined approach where the auditor does both test of controls as well as substantive testing. Now, based on the assessment of RMM at the financial statement level, the auditor may also make general changes to the net of audit procedures. So for example, when we talk about the nature, that's the N of net, the auditor may modify audit procedures to obtain more persuasive audit evidence. Extent, the auditor may increase the sample size, increase the extent of audit evidence. Timing, the auditor may want to perform substantive tests at period end, which is more effective than performing substantive tests in the interim. And the A of tuna is highlight accounting policies selected or applied by the entity. So the auditor needs to evaluate if the accounting policies are appropriate and consistent with US GAAP requirements. The auditor needs to evaluate for fraud risk, especially if measurements are subjective or transactions are complex. So guys, once again, when we talk about the auditor's assessment and response to RMM at the overall financial statement level, our mnemonic is tuna. Now on page 10, we're looking at the auditor's assessment and response to, put a box around RMM at the assertion level, where we look at balances, transactions, and disclosures to the financials. And the very important question that I have for all you future CPAs out there, fill in the bubbles. Are you CPAs? Now, RUC, put a bracket there and write risk assessment procedures. Where the R of RUCPAs is highlight risk assessment procedures. U is understanding the entity and its environment, including its internal control, where the auditor evaluates underlying design and implementation of internal controls. The C of RUCPAs is CR, that's control risk, or RMM assessment, where the question is
is there a basis to rely on internal controls? If the answer is yes, there is a basis to rely on internal controls, then the auditor performs, right, test of controls. So that's the P of our RUCPAs. When the auditor performs test of controls, the objective is to determine underlying operating effectiveness of internal controls. Then the auditor assesses results of test of controls. And the question is, can we support a lower CR? And the S of RUCPAs is, right, substantive tests. Let's go back up on this page where we have the RU of RUCPAs. The question that's there for the auditor is, what's the form? So the auditor is looking at the form of internal controls, the design and implementation. Where we have the C of RUCPAs, the question is, right, is the form okay? If the form is okay, the answer is yes, then the auditor performs test of controls. And the question there is, what's the substance? So the auditor is looking at substance or the operating effectiveness of internal controls. For the A of RUCPAs, the question for the auditor is the substance okay? So guys, the auditor is looking at the substance or the operating effectiveness of internal controls only when the auditor finds the form to be okay. And this is basically highlight a combined approach. So basically the auditor tries to rely on internal control, and if the reliance on internal control increases, right, CR goes down, the auditor can afford a higher DR and do less substantive tests. Now, let's go back once again on this page where we have the C of RUCPAs. The question is there a basis to rely on internal controls? Is the form okay? Now, if the answer is no, that means highlight CR is at max level. In that case, the auditor might not even want to test internal controls. He might not want to do test of controls. He might not want to look at the substance and do only substantive tests. Now, this approach is possible, highlight only if the client is a non-issuer, where the auditor is not doing an integrated audit. And the auditor adopts, highlight, substantive approach. So using the substantive approach, right, rely on internal controls, that's not there, which means CR goes up. CR is very high. It's at the maximum level. The auditor now needs to reduce DR by performing extensive substantive tests. So guys, when we look at the combined approach, that's RUCPAs. The auditor is performing risk assessment procedures, test of controls, and substantive tests. However, when we're looking at the substantive approach, the auditor performs the risk assessment procedures followed by substantive tests. The auditor does not perform test of controls. Basically, the auditor does not want to rely on internal controls because control risk is at maximum level. The form is not okay, and he decides to do only substantive tests. And of course, he increases the nature, extent, and timing of substantive testing.
Once again, we started audit 3 stating that management is responsible for the internal controls, and we said the 5 components of internal controls, that's crime. Then we, the auditors, we stepped in and we assessed those internal controls placed by the management. How did we do that? We did that by asking ourselves, are you CPAs? So that is what we have on the board right here, and we divided that into 2 parts. So the first part, RUC of RUCPAs, that was risk assessment procedures. The second part, PANS, was the further audit procedures, which was test of controls and substantive testing. We know that we can take a combined approach where we do both test of controls as well as substantive tests, or we could do a substantive approach where we're doing only substantive tests. We generally take a substantive approach when internal controls are pathetic. There are no internal controls and control risk is at maximum level. So if control risk is at maximum level, we need to lower detection risk, do a lot of audit work, lot of substantive tests. We know test of controls is percentage of frequency, how often the controls are adhered to. Substantive test, that's a test of dollars here. It's a test of transactions, it's a test of balances, and a test of disclosures on the financials. Now, let's look up here. So you have RUC, risk assessment procedures, 2 steps. First, you understand the entity and its environment, including its internal control. Basically, as auditors, you're trying to understand the crime. Has it been designed properly? Has it been implemented properly? And then I told you, you document whatever you find. Now, this is basically find is another mnemonic which should help you remember the various ways you have to document. The F of the find, that stands for flow chart. So I'm sure if you have seen flow charts, that's like a visual depiction. So you could have an output box, an input box, you could have a decision box, a document box, a lot of connectors. We'll do flow charts when we're talking about operating cycles. We're going to look at the revenue cycle, the expenditure cycle, the conversion cycle, the payroll, the investing, the financing. Lots of cycles to come and lots of flow charts. So flow chart, visual depiction. The I stands for internal control questionnaire. So think about it. You have a questionnaire developed and you give it to one of your audit assistants and you ask him to go to the controller, to the CFO, or to the entity personnel and ask them these questions. So let's say you give these sort of questions to your assistant and he takes them. He goes to the controller and he's got them ready in front of him. So let's say he's trying to ask questions about the revenue cycle. So he asks the controller, when you get a purchase order from your client, does your sales team generate an internal sales order? Yes or no? The controller says yes. So he takes yes. Then he asks, when the sales team, so that's his accent, when the sales team generates an internal sales order, is that internal sales order approved by the credit team? Yes or no? The controller says yes and he takes yes. Then he asks the controller, when the internal sales order is approved, is a copy of that sent to warehouse and shipping? The controller says yes. So you take a yes. Then when the shipping department ships out the goods, does a copy of the bill of lading get sent to the billing department? So that's basically you're trying to understand the internal control structure by using a set of questions where the answer is either a yes or a no. So that's I, internal control questionnaire. The N of the find, that's narrative. That's like written description in details. That's for people who love novels, who love stories. Narrative. Another way of explaining how the internal control looks. So guys, if you understand, we are looking at what is the internal control structure? What is the design of internal controls? So that is how we use all these techniques to put it down on pen and paper. We could use flowcharts, we could do an internal control questionnaire, we could do N, which is narrative, or we could do D, which is decision tables. That is, decision tables are basically an extension of the internal control questionnaires, an extension of yes-no questions. So if the answer is yes, it leads to another question. If the answer is no, it leads to another question. So it becomes a higher modification of the internal control questionnaire. So we'll look at flowcharts as we go on with operating cycles on the next part of this chapter. So these are ways you document it. You're looking at you're looking at the design and implementation of internal controls at the client. As auditors, you need to document whatever you find. Now, so this is basically the risk assessment procedures. Now I told you P is perform test of controls. So depending on your control risk assessment, if control risk was maximum, you said I don't want to test controls which do not exist. But if control risk was below maximum, you said okay, let me see what's it. So because the form was okay, you said I'll check the substance. So that is when you perform test of controls. Here you looked at design and implementation. Test of controls, you're looking at operating effectiveness. And how do you do test of controls? And you got another mnemonic for that. Guys, I know you're getting a lot of gifts from me, a lot of gifted mnemonics. Trust me, these are all going to be put together and helping you crack the CP exam. So your mnemonic for test of controls is RIO. So as auditors, you perform RIO around the arcs. So you do RIO to test the arcs, to test whether the management has authorization, recording, custody, comparison, and separate teams doing all these jobs. So let's look at RIO on the other side of the board. Come on down. So you have test of controls. That's basically your auditor weapons to test the internal controls that the management has. And the mnemonic for this, as I told you, is RIO, where R of your RIO, that is reperformance. So when you're reperforming, you actually are trying to reperform the application of the internal control. You want them to do it all over again. So in the revenue cycle, let's say the shipping guys ship out the goods and send the bill of lading to the billing department. You want to reperform that. You want to see them doing it. So that's reperformance. Inquiries. This is when you want to ask. So you inquire of the sales team, you inquire of the credit team, you inquire of the warehouse guys, the shipping guys. You want to inquire of all entity personnel. You want to inquire of management how the internal controls are put in place. Have they been operating effectively? Now inquiries alone is not sufficient. You're going to mix it up. You're going to do all of RIO. You're going to mix and match. The I of your RIO, the second I, that is inspection. So here you're looking at documents, you're looking at records, you're looking at electronic files to understand whether internal controls have been operating effectively. So that's basically your testing controls, you're inspecting. The O of RIO, very effective observation. So you reperformance, you want to do them all over again, you want to do it yourself to check what's happening. Observing, here you're seeing it yourself. So it's something like you hide down there. You hide it. You hide when the treasurer is writing out checks to your vendors. So you hide and you want to check if they're doing the right job, if they're not stealing money, if they're not cooking up these numbers. So that is observation. You want to be sure that the controls are put in place. You want to observe with your own auditor's eyes, with your eagle eye vision. Remember? So guys, that is RIO that you use to test controls. So you have R, reperformance, inquiries, inspection, and observation. Now, within inspection, we're going to talk about vouching and tracing. So let's try to analyze how it's happening. So you have source documents. So let's say when the client, they wanted to sell out goods, they received a purchase order from their customers. So they received the purchase order. That's one source document. After they received the purchase order, they generated an internal sales order. That's a source document. After they generated an internal sales order, it went to the warehouse and shipping guys, who then got a bill of lading. So that was another source document. So you have various levels of source documents. After the sale is done, it then gets entered into the journal. From the journal, it goes to the ledger. You remember accounting? From the ledger, you put it to the trial balance. And then finally, it appears on these financial statements. So you have sales and you have accounts receivable. Let's say accounts receivable pays cash, so you reduce accounts receivable, increase cash. So that is basically going to the financial statements. So this is how it runs. So you start with the source documents, then goes to the journal, ledger, trial balance, and financial statements. Now, when you come down from the financials to the source documents, so when you start from these financials, you start from the balance sheet, the income statement, and then you want to look at the trial balance. Then you want to look at the ledger, the journal, the source documents. That is when you're vouching. When you start from the source documents, you're starting, let's say, from the purchase order that they received from their customers. You're starting from their sales order. You're starting from the bills of lading. You're starting from there, and then you're moving up the order, the journal, ledger, trial balance, and then you're looking at these financials. So you're starting from the source, coming to the financials. That's called tracing. So guys, if you look V, that's pointing downwards. If you look at T, it's pointing upwards. It'll help you remember what's vouching and what's tracing. Very important. Now, I have been flooding you with mnemonics, and I can't help but give you one more. And this one, I really love it. So the mnemonic here is you vouch in reverse order for existence. You trace in order for completeness. So I'm sure you're understanding. You're vouching in reverse order of preparation because the financial statements, they came in at the last. You started with source documents. So when you start from these financials and you go down, you're vouching in reverse order. Existence, we'll talk about that. Tracing in order of preparation for completeness. And the mnemonic here is Varun, me, I'm really excellent. Varun's really excellent in training of you CPAs. Guys, you remember I asked you there, are you CPAs? And now I'm telling you, your instructor, Varun, I'm really excellent in training you CPAs. So Varun's really excellent in training of CPAs. So that's vouching in reverse order for existence, tracing in order for completeness. Let's say we are looking at the accounts receivable or the sales number here. Think about it. Generally, when you're looking at, as an auditor, you're going there with a professionally skeptic attitude. And when you're looking at these numbers, you're looking at, let's say, the sales numbers. What do you think management would try to do with that? Don't you think, as auditors, as professionally skeptic auditors, that management may try to overstate those numbers so that they can show more sales, more revenue, more income here, they get more bonuses, they get their jobs, they get good golden parachutes. So that is what they want, higher sales so that they can show higher income. So when you look at sales, you think that the numbers here on the financials, they would be higher. So let's write here. So we could say that the numbers that management has on these financials is higher than the number on the source documents. So let's say they made sales for 100 million, but they want to show on the financial statements 150 million. How do you catch that? How do you catch the extra 50 million? So if you realize there's an extra 50 million out here, how do you catch that extra 50 million? You start from the financial statements and you go down looking for source documents. So for $100 million, yes, you would find source documents because 100 million was the actual sales they made. But for the 50 million, you will not find. You will ask them, where are the sales, where are the documents, where are the bills of lading, where are the sales orders. So that is how you catch it. So you want to go down from the bigger number to the lower number. If it's an overstatement of sales, you want to vouch in reverse order for existence. You want to check whether the sales number here has that actually occurred. Does that actually exist? So when we're looking at occurrence, when you're looking at the sales number, when you're looking at the accounts receivable number, management might try to overstate that, right? Accounts receivable is an asset. They want to show that they have more assets and less liabilities. So if you're looking at the sales number, you want to check whether the sales number has actually occurred during the year. When you're looking at the accounts receivable number, you want to check whether the accounts receivable balance actually exists. It shouldn't be that the actual is 100 million, but they're showing 150 million out here. And you start from here and you go down looking for source documents. with your RIO, and I'll give you more audit procedures when we get to substantive testing. So that was vouching in reverse order for existence. It generally helps you find out in case there are any overstatements, if they're showing 100 instead, if they're showing 150 instead of showing 100. Now think about expenses, think about purchases, think about accounts payable balances. Now management may try to understate. Why? Because again, they want to show more income. So if they basically, if you look at it, so it's something like this. So you have sales less COGS gives you gross margin. So if they overstate sales, they can increase their margins. How about they're trying to understate COGS? So even that would lead to increase in gross. So that is what management may try to do. Now think about it. Let's say they've actually bought goods worth 70 million, but on the financials here, they're showing only 50. So they've bought goods worth 70, but they're showing 50 on the financials. So if you start with the 50 million that you have on the financials here and you look out for source documents, you would find source documents for everything. So here, how about you start with the source documents? You start with all the relevant source documents and then go up to the financials. That would help you find the gap, the understatement by the management. So you would find that they should have recorded 70, but they recorded only 50. There was an understatement. So you are tracing in order of preparation. So you're tracing in order for completeness. So you want to check whether all events, all balances, are they complete on the financials? Are they completely recorded? So all the transactions that they happened, did they record it completely? All the balances, did they record it completely? So you're tracing in order of preparation for completeness. Guys, I want you to really remember this, and you get a lot of questions on your CPA exams. So you vouch reverse order for existence. You trace in order for completeness. So Varun's really excellent on training of you CPAs. So that was basically our RIO. Inspection included vouching and tracing. Inspection is also examining documents, but generally we would say it could be vouching or tracing. So now I'm sure guys you're getting a hang of it. So we are saying that we auditors, we do a RIO to test internal controls. Internal controls is crime, where C is the control environment, R is risk assessment by management, I is information and communication, M is monitoring by management, E of the crime, that's existing control activities, and very important, arcs. So what we are saying is we are doing a RIO around these arcs. So let's put it here. So you're doing RIO as auditors, you're doing RIO around the arcs. So let's keep the S silent as we do and divide this arcs. So you have RIO, these are your audit procedures, your test of controls, where you check whether management has put controls in place, whether they have authorization, recording, custody, comparison, and segregation of those duties. Now, so that is during the internal control phase. So you're looking at performing test of controls. So your P of RIO CPAs, that's performing test of controls. Now we'll cover this in audit 3, especially when we're looking at all the operating cycles. Now, when we get to audit 4, corroborative audit evidence, that's when we'll focus on the S of RIO CPAs, we'll focus on substantive testing. So let's put it there. So you're doing RIO around the arcs. In audit 4, when we talk about substantive testing, that's not for now, that's for audit 4. We'll have RIO, car, race, apps. I'll tell you what it all means. For now, just remember, right now you're doing RIO around the arcs, then you'll download a RIO car race application and you would move around the cover up by management. So now we are saying management is responsible for internal controls. They are responsible for putting the arcs in place. Then in audit 4, we would say management makes certain assertions. When management is giving us these financials, they are making certain assertions. They are telling us, they're acknowledging that these financials, they are complete. There is right cut off. Complete, remember, everything that's occurred has come in on the financials. O is cut off. V is valuation, allocation and accuracy. So all the numbers here, they are accurate. They have been allocated correctly. The valuations here are correct. E stands for existence. Everything in here actually exists or actually has occurred. R, that's rights and obligations. So management would say that they have rights to the assets that they have here and they have obligations for the liabilities on here. The U is understanding and classification. There's proper understanding and classification of the balances, the accounts here. P is presentation and disclosure. So when management gives us this financial statements, they make these assertions. So these are internal controls by management. So this is internal controls by management and these are assertions by management. So in audit 3 we'll focus on this part. ARC in audit 4 we look at management assertions of cover up. Remember we've already seen two of management assertions here. We've seen existence, we've seen completeness. So C is the C of our cover up and E is the E of our cover up. So we have seen a couple of assertions here and then we will not only do RIO, we'll do more audit procedures. We'll have more weapons. We'll already have RIO plus we'll have car race apps. We'll use all these procedures to test for management assertions. Right now we are looking at test of controls. We are sticking to performance of test of controls, the operating effectiveness of these controls that we have here. When you're looking at substantive testing, we are looking at more audit procedures. We are looking at RIO car race apps. Now RIO, so I'm sure all of you have watched that movie RIO where you had the lovely bird Blue who could not fly. Now guys, we are auditors. We are not Superman. We don't know how to fly, but we walk real fast. We are really fast in walking around. So that's when I say we're doing RIO around the arcs. We walk really fast as auditors, right? You can see me walking fast. Then when we'll get to substantive testing, audit 4, we'll take a car and we'll race it around management assertions. We are really fast. We don't know how to fly, but we walk real fast. And then when we get to S of RUCPAs, we get to audit 4, we'll do a car race. Now, one more thing I remembered when we said walking. When you're testing internal controls, when you're doing RIO, often we use the term walkthroughs. Now, what's a walkthrough? A walkthrough is basically when we as an auditor, we come in, basically a walkthrough is done initially when you're trying to understand internal controls as part of your risk assessment procedures. You might also do it as test of controls, but generally when you come into the company, you're trying to understand the form. So once again, when you come into the company, you're trying to understand the entity. So I told you about test of controls, we do RIO here. When you come into the company, you're trying to understand the entity, you're trying to understand the internal environment at the company. That's when you might want to do a walkthrough. So let's walk through. So as part of walkthrough, you do a mixture of all this. You generally do inquiries, you do inspection, you do observation, and as part of walkthrough, you often do tracing. You don't do vouching. You basically start from the source documents and go to the financial statements. You basically look at how internal controls are. You don't understand how internal controls are. So whenever you have the word walkthrough on your examinations, remember it's a mixed bag. It's inquiries, inspection, observation, and tracing. Little bit of re-performance, yes, but generally these three plus tracing. Don't usually do vouching with walkthroughs. Walkthroughs generally done to understand. Now, RIO, these are basically your test of controls. Naturally, even to understand the internal controls, you would use similar procedures. You would use, generally you focus on inquiries, inspection, observation, and tracing to understand internal controls, and you would do RIO to test those controls. I know I'm giving you a lot of content. This is real conceptual stuff. You're going to actually use all of these when you get to the clients. Let's get to the book, understand how it's happening, and then we'll look it up again.
On page 11, highlight risk assessment procedures. Right there, RUCPAs and circle R. Now the R of RUCPAs, which is risk assessment procedures, right, is equal to U plus C. So basically RUC is what we call risk assessment procedures, where U is understanding the entity and its environment, including its internal control. C is CR or RMM assessment. When performing risk assessment procedures, the auditor needs to identify and highlight assess RMM at financial statement level, circle and highlight relevant assertion level. Risk assessment procedures include underline walkthrough and highlight the W. Underline analytical procedures, highlight A. Underline inquiries, highlight I. Underline inspection and highlight the I. Underline observation, highlight O. So guys, when we look at test of controls, our mnemonic is going to be RIO for test of controls. When we're doing risk assessment procedures, we are warming up to get to RIO. So our mnemonic for risk assessment procedures is WAIIO, where the W is walkthrough, A is analytical procedures, I is inquiries, the second I is inspection, and O is observation. Turn to page 12. Right there. Are you CPAs? And circle U. Because the U of are you CPAs is highlight understanding, underline entity and its environment, including highlight internal controls. Now, when understanding the entity and its environment, the auditor should obtain an understanding of underline objectives and strategies of the entity. Highlight O. Underline performance of the entity. Highlight P. Underline external factors. Highlight E. And underline nature of the entity. Highlight the N. So guys, another mnemonic that you have for the auditor's understanding of the entity and its environment is OPEN, where the auditor tries to understand the objectives, strategies, performance, external factors, and nature of the entity. Now, when we look at understanding internal control, the auditor evaluates the design and implementation of internal control. The next line, highlight design, and then the auditor determines whether the controls are implemented or placed in operation. Now, understanding of the design and implementation of internal controls is used by the auditor to, number one, assess RMM, and number two, design the net of further audit procedures. So where you have assess RMM, write C and draw an arrow. The net of further audit procedures, write PAS and draw an arrow. So guys, we are at the U of RUCPAs, which helps us assess C and design PAS. And that's how it becomes RUCPAs. Let's make a little note at the bottom of the page, right? Management implements internal control, crime. While the auditor obtains an understanding of internal controls, again, crime. Moving to page 13, we are talking about highlight the top-down approach which the auditor may use to understand internal controls. In this approach, the auditor goes top-down, where he begins at the financial statement level and then works downwards. The auditor looks at both underline entity level controls as well as activity level controls. So let's look at the little illustration that we have here. Right, begin at and highlight financial statements. Right, work down, highlight transactions, balances, disclosures, highlight assertions. Then you have risks and control objectives. Highlight controls and write the word key there. So we're talking about key controls. So basically, the auditor begins at the financial statement level, highlight financials. Then the auditor works down to identify significant transactions, balances, and disclosures. The examples that we have here is sales, cash, highlight AR or accounts receivable. Then the auditor looks at relevant assertions. For example, highlight existence. The auditor then looks at risks. That's what can go wrong. He looks at control objectives which may mitigate the risk. And then the auditor selects controls for testing. Highlight control A, control B, and control C. So guys, this is an illustration of the top-down approach where the auditor goes top-down, starts with the financial statements and then works downwards. On page 14, we are looking at highlight entity level controls and highlight activity level controls. Now, entity level controls are designed to address risks that relate pervasively to the financial statements as a whole and potentially affect many assertions. Whereas the activity level controls address risk which relate to specific classes of transactions, balances, and disclosures. For example, a control to ensure that all accounts receivable that have been recorded actually exist is an activity level control. Highlight, since entity level controls are pervasive, it may be more effective and efficient for the auditor to evaluate the design and implementation of entity level controls before evaluating the activity level controls. Next, we are looking at highlight preventive controls versus highlight detective controls. Now, preventive controls prevent misstatements from occurring, whereas detective controls detect and correct misstatements after they have occurred. Generally, preventive controls are costlier to implement when compared to detective controls. An example of preventive controls is the use of security devices to safeguard inventory, whereas the detective control would be periodic physical inventory counts. On page 15, we're looking at a few techniques for highlight documenting the auditor's understanding of internal controls. And we know that the auditor needs to document whatever he finds. So right there, find and write F of find, highlight flowchart. Right, I and highlight internal control questionnaire and checklist, which generally consists of a list of highlight yes/no questions. Right, N of find and highlight narrative memoranda. And right there, D, which is highlight decision table or tree. So guys, the auditor could use flowcharts or internal control questionnaires and checklists or narratives or decision table or trees to document his understanding of internal controls. On page 16, right, RU CPAs and circle the C, because we are now looking at highlight CR or RMM assessment. And the big question here is, right, is there a basis for reliance on internal controls? The auditor should underline identify risks while understanding the entity and its environment, including its internal controls. Underline assess the identified risks. Underline evaluate whether they relate more pervasively to the financials as a whole and potentially affect many assertions. Underline relate the identified risks to what can go wrong at the relevant assertion level, taking account of relevant internal controls that the auditor intends to test. The auditor should consider underline likelihood of potential misstatements, circle and whether these are of underline a magnitude that could result in a material misstatement. The auditor should determine if any identified risks are underline significant risks which require special audit consideration. For example, the risk of fraud, complex transactions, related party transactions, unusual transactions. Now note that not all high risks are significant risks. For example, collectability of accounts receivable may be a high risk but not a significant risk. That is, no special audit consideration is required beyond extensive but customary substantive tests of collectability. Basically, to provide a basis for designing and performing further audit procedures, the auditor should identify and highlight assess RMM at highlight financial statement level, circle and highlight relevant assertion level. To respond to the risks at the financial statement level, the auditor develops highlight an overall response. An mnemonic for that overall response is tuna. At the relevant assertion level, the auditor's response is our entire mnemonic RUCPAs, and the PAS is the further audit procedures that the auditor performs. Now, the auditor could use highlight a substantive approach or highlight combined approach. For substantive approach, right, only substantive tests. Combined approach, that is right, test of controls plus substantive tests. Now, generally, the auditor uses the substantive approach if highlight internal controls appear to be non-existent, inadequate, or ineffective. That means control risk is at maximum. Or if the auditor believes that the test of controls will be inefficient. However, when the auditor uses a combined approach, basically highlight the auditor intends to rely on internal controls. On page 17, right, RUCPAs and circle the P, because we are now looking at highlight performing test of controls. So the auditor here, right, tests the operating effectiveness of internal controls. So when we did the U of RUCPAs, the auditor was looking at the design and implementation of internal controls, the form. Here, the auditor is testing the operating effectiveness, the substance of internal control, because highlight the auditor intends to rely on internal controls. On the third sub-bullet there, we're doing risk assessment procedures versus test of controls. So risk assessment procedures was the RUC of our RUCPAs. Test of controls, that's the P and A. As I said, risk assessment procedures, the auditor evaluated design and implementation of internal control. While performing test of controls, the auditor is evaluating highlight operating effectiveness of internal controls. While doing risk assessment procedures, the auditor looked at the form of internal controls. The question was, are internal controls even present? Now, while performing test of controls, the P of RUCPAs, the auditor is looking at highlight substance of internal control. And the question is highlight, are internal controls functioning? The procedures for risk assessment procedures, we said warm up to get to RIO. So WAIIO. In test of controls, as you know, our procedures are highlight RIO. Now, there might be some test of controls which actually serve a dual purpose, which means they are both test of controls and substantive tests. And these tests are called highlight dual purpose tests, which are concurrent performance of test of controls and substantive test of details. For example, examination of invoice to determine whether it has been approved, that's the test of control, and to provide substantive evidence of dollar value of the transaction, that's a substantive test. And both these tests happen together, happen concurrently, hence the name dual purpose tests. On page 18, we get the procedures which the auditor uses to perform test of controls, and that is RIO. On the first bubble, write R, highlight re-performance. Next is write I, highlight inquiry. Next bubble is another I and highlight inspection. And I told you to think of your instructor and remember that Varun's really excellent in training of UCPAs. And that meant we need to highlight vouch in reverse order and highlight existence. So Varun's really excellent. So that's vouching in reverse order to test for existence. And an example is underline account books to the source documents. Then I said training of CPAs. So that's highlight tracing, highlight in order of preparation and completeness. And underline source documents to account books. So guys, when you're looking at inspection, remember that Varun's really excellent in training of CPAs. Then we move on to the O of RIO. So write O on the bubble, highlight observation. So guys, basically, right, auditor uses RIO to test if ARCs are operating effectively. On page 19, we are looking at the net, that's nature, extent and timing of test of controls. Highlight nature and extent of test of controls. So nature means which test, so what do you choose among the RIO? Extent means what's the sample size? Highlight due to the inherent consistency of IT processing may not need to increase extent of testing of an automated control. So in an automated control, either everything goes right or everything goes wrong. Next, highlight timing of test of controls. Underline using audit evidence obtained during an interim period. Or even underline using audit evidence obtained in previous audits. And a few lines below that, the auditor should test the controls, highlight at least once in every third audit. So at least once in every 3 years. However, for controls over highlight significant risks, auditor should test the operating effectiveness of those controls in the current period. Moving to page 20. Again, write RUCPAs. I want you to really remember this. Circle the A because we are now looking at assess results. So evaluate operating effectiveness of internal controls. That could lead to reassessment of CR so as to determine DR. And the big question here is, can internal controls be relied? So guys, when we did the C of RUCPAs, which was CR or RMM assessment, the question was, is there a basis for reliance on internal controls? Is the form okay? Now in the A of RUCPAs, the question is, can internal controls be relied? Is the substance okay?
Now, you've looked at RUCPA on your book now. Before you look at S in detail, I want to walk you through my board again. So I want you to understand everything, guys. Please understand all of this. That's all links together. This is all your field work. This is all your audit procedures. So you plan your audit procedures and then you perform these procedures. Why do you do them? To obtain sufficient, appropriate audit evidence to afford a reasonable basis for an opinion on the financial statements. So this is all your work as auditors. This part, this was risk assessment procedures. You try to understand what is there at the clients. You try to understand the client's internal control. You did a control risk assessment to help you design the nature, the extent and timing of further audit procedures. Further audit procedures again and again. Test of controls plus substantive testing. Test of controls, you're looking at internal controls that create the financials. Substantive testing, you're looking at dollar numbers on these financials. Now, we've looked at test of controls. We know that we perform test of controls by doing RIO around the arcs. So this was our test of controls. Now, we know that test of controls we may or may not do. If internal controls are really bad, really pathetic, we don't want to waste our time doing test of controls around internal controls which do not exist. If internal controls are good, then we would look at controls so as to reduce our amount of substantive testing. So this is your substantive testing. So substantive test is Rio car race apps. I'll not talk about this more before we get to audit 4, but we'll look at a bit at the management assertions now. We'll look at cover up. So again, guys, let's start from audit 0, where we start the audit intro session. So we said management is responsible for the financial statements. We as auditors, we are responsible for our opinion on these financials. That was all good. Then I told you management is responsible for internal controls that create these financials. We as auditors, we only assess those internal controls. We might want to test those internal controls. How do we do that? By doing RIO around those internal controls. Internal controls is crime, and focus on the crime is the E of the crime, which is ARCs. So management puts the internal controls. We use RIO to test those internal controls. Then we come to the financial statements. So as I told you, management is responsible for the financial statements. When management gives us the set of financial statements, they prepare the financials, they give it to us for an audit. When they give us these financial statements, they make certain assertions. They say cover up. So management is trying to cover up. So when they're giving us the financials, they are telling us along with the financials that they have covered up well. That means everything here is complete. They have followed the right cutoff, that means the right period, right valuation, right existence and occurrence, correct rights and obligations, understanding and classification, presentation and disclosure. So this is what management tells us. Now guys, we don't trust the management, right? We are professionally skeptic. How do we check whether what they are saying Whether the cover up, have they actually followed it or they're lying? How do we know that? Are the numbers real or have they cooked it up? How do we check that? By doing Rio car race apps, by doing substantive tests around these numbers. So we do Rio to test internal controls, substantive test to check the numbers out here. So these are all our further audit procedures, test of controls plus substantive test. So guys, I hope this is all making a lot of sense for you. Let's go to the dashboard, do a little bit of writing there, and again trying to link this RUCPAs with the 10 gas. Let's do that there. So you have RUCPAs, and now I want to link to this fieldwork. So you have RUCPAS. What I would tell you is, generally we will talk about RUCPA, this entire thing, in audit 3. So this is something we're going to cover in audit 3. Remember, audit 1, that was the general tip, focus on the I. Audit 2, that was the P of your pick. Audit 3, we'll talk about RUCPAs. RUCPA, so you have RUC. This part, this is the risk assessment procedures. This P is test of controls, perform test of controls. So this part we'll talk in audit 3. So generally audit 3 focuses on the RUCPA of S. The S of RUCPAs, this is something we're going to cover in audit 4. So this basically more or less helps us generate corroborative audit evidence, the C of our pick. Now, these are not watertight, okay. Substantive tests, they help us gather a lot of evidence, but even test of controls and risk assessment procedures, they also help us gather evidence. So it's not watertight, but I've just tried to put it together. So I've put RUCPA in audit 3, where we'll talk about risk assessment procedures and test of controls. We already looked at risk assessment. We'll look in detail about test of controls now and in the operating cycles, which is coming up. The S, substantive testing. This gets covered, the Rio car race apps around the management cover up. This gets covered up in audit 4, where we talk about corroborative audit evidence, the requirement on us to gather sufficient appropriate audit evidence. So we're looking at I of the pick, that's internal controls. We are testing the internal controls. First we understand the internal controls, risk assessment, then we test those controls. When we get to the C of a field pick, audit 4, that's when our focus would be to gather corroborative audit evidence. We do a lot of substantive testing to gather evidence. Test of controls and risk assessment procedures also help us gather evidence, but substantive testing, that's the major focus when we are looking at audit evidence.
Back on page 20, we are again looking at, right, RUCPAs. Circle S, because that is highlight substantive procedures. Now, substantive procedures are, right, test of dollars. We are looking at transactions, account balances, and disclosures. Now, substantive procedures include highlight test of details, which is Rio car race, and highlight analytical procedures, that's apps, and that makes it Rio car race apps. All are substantive tests. Now, talking about the net of substantive tests, that's highlight nature, extent, and timing. So nature is basically what tests. Extent is how much, what's the sample size. Timing is when, interim or year end. Now, basically, when the auditor is doing substantive testing, the auditor is testing management assertions. And we know that management, they might try to cover up. So that's a mnemonic for all the management assertions. And we've already spent some time discussing management assertions of highlight completeness and highlight existence. And none of you can forget my mnemonic, which is Varun's really excellent in training of CPAs. Move to page 21 and highlight the net of substantive tests should be responsive to the assessed RMM. And we've covered this in the audit risk model. We said if the client has good internal controls, control risk comes down. The auditor can afford a higher detection risk and can do less substantive testing. But if the internal controls at the client are ineffective, bad internal controls, control risk goes up. The auditor has to reduce detection risk and increase the nature, extent, time, the net of substantive tests. And before we move on to the next section and start looking at operating cycles, let's recap audit procedures one last time. Right there, audit procedures, that is the question, are you CPAs? Right, RUC, put a bracket and write risk assessment procedures. And then write PAS, put a bracket, write further audit procedures. And that's test of controls plus substantive tests. So guys, RUCPAs is risk assessment procedures plus further audit procedures. Further audit procedures include test of controls and substantive tests. Within substantive tests, we got test of details and analytical procedures. So test of controls is RIO and substantive tests is RIO car race apps. That's a lot of mnemonics, but helps you put everything together so that when you get to your CPA exams, you know exactly what I mean when I say, are you CPAs?